We've got Adam Crisafulli, Victoria Greene, and Mike Santoli all still on tap. Victoria, I'll go to you. It's almost like cafeteria style. We just heard from so many companies across so many industries. What jumped out at you the most?
Some of it, I would say Tesla and Netflix are obviously the two everybody was most interested in today. Yeah. And I think for Tesla, we really want to hear what they're going to do if we're going to get that robo-taxi, if we're going to get that autonomous driving, because the stock is only worth $918 billion if it's a technology component that comes in. Investors are expecting them to come through with that. So I think we need to hear what they have to say about the Cybertruck, what happened with inventories. You know, obviously it was great that they beat on revenues even with the discounting. So that was a relief. But I think we really need to get some updates. You know, when are we getting Cybertrucks and when are we getting autonomous fully self-driving? Because the full self-drive, it's expected Tesla's going to get there first and get there soon. And I think investors are betting on that, and that's why the stock is worth so much right now. So I think a lot of that's going to be in the guidance. Netflix, I just like this stock. I know they missed a little bit on earnings, but I think what they're doing is so smart. They're driving people to the ad-based fear, which is priced 15% below the paid sharing. So they're driving brand new subscribers that maybe have been leeching on to actually having their own profile, and eventually they may move through. I want to see what their average revenue per user ended up being, and I do think they're well positioned with their content pipeline to really benefit. Even if the Hollywood writers and actors strike drags on, they're probably best positioned in the media stocks to weather that, and they should get a lift from the dollar because about 50% of their revenues are international, providing them these growth markets. So both of those, again, we're going to have to hear some commentary.
All right, Adam, I bet you weren't expecting me to ask you about United, but I'm gonna, because it's up more than 2.5%. And that actually qualifies it as one of the bigger movers, which, again, is not what the options market was expecting. Does that tell us anything about airlines and room still to run, or is this just a one-off?
No, I think there's been a lot of concern that travel, the one part of the consumer economy that's been on fire, was at risk of kind of rolling over. But we saw with Delta last week with their report, extremely strong conditions on the ground, and management almost described it as this secular boom that's still in, at most the mid-innings. There's still several more, there's still a lot more of the recovery to go as the industry rebounds from where it was before the pandemic. And Delta outlined a lot of really interesting charts just showing how much further capacity traffic has to go before it gets back to where it was before the pandemic. So travel leisure portion of the economy looks like it remains very robust based on what United said. And it's interesting that they're still performing very well, even with a big jump in capacity guidance, suggesting that pricing is coming off a little bit, which you saw in the last CPI. So airfares look like they will come down, but that isn't denting their overall revenue and earnings growth because demand is still so healthy.